When samples leave the showroom, inventory often goes down while nobody can explain where the cost went. The problem is usually not the small quantity. It is that bulk goods and samples still share one item code. This lesson uses a fully anonymous isolated reconstruction to show how ERPNext can connect a bulk SKU, a sample SKU, repack cost transfer, sample sales, delivery, invoicing, and payment. No name, number, or credential comes from the fabric customer's production environment. Step 1. Inspect the bulk SKU. The tutorial bulk item is stocked in meters. We receive 20 meters at a valuation rate of 80 yuan per meter, so the opening inventory value is 1,600 yuan. Keeping the bulk item in meters preserves the real purchasing and inventory unit. Creating samples is not a reason to change the bulk stock unit to pieces. Step 2. Inspect the sample SKU. The sample is a separate stock item measured in pieces. The two item names can express a business relationship, but their quantities, valuation, selling price, and purpose remain independent. With separate codes, the system can answer how many meters of bulk stock remain, how many sample pieces exist, and how much cost each sample carries. Step 3. Use repack to convert stock. This example consumes 1.2 meters of the bulk item and produces 6 sample pieces. At 80 yuan per meter, the outgoing inventory cost is 96 yuan. The 6 samples receive the same 96 yuan, giving a valuation rate of 16 yuan per piece. No inventory value is created from nothing, and the samples are not assigned a zero cost. Step 4. Verify repack value conservation. The submitted stock entry shows an outgoing value of 96 and an incoming value of 96. The stock ledger confirms that bulk inventory falls from 20 meters to 18.8 meters, while sample inventory first rises to 6 pieces. Quantities may be converted between units, but stock value must not disappear or increase without an authorized cost adjustment. Step 5. Sell 2 sample pieces separately. The sales order uses the sample SKU quantity 2, unit price 25, and a total revenue of 50 yuan. After delivery is submitted, sample inventory falls from 6 pieces to 4. The 2 delivered samples carry a total cost of 32 yuan. For this paid sample demonstration, revenue is 50, cost is 32, and the illustrative gross margin is 18. Step 6. Verify invoicing and payment. The sales invoice total is 50 yuan. The payment entry allocates 50 yuan to that invoice. The invoice status is paid, and the outstanding amount is 0. Bulk inventory, sample inventory, sales revenue, sample cost, and receivable settlement now form one traceable document chain instead of an external spreadsheet calculation. Step 7. Keep the accounting boundary explicit. This lesson uses paid samples, so revenue and cost produce a visible margin. If the company sends free samples, do not invent sales revenue. First define whether the cost belongs to sample expense, marketing expense, selling expense, or a customer reimbursed shipment. Returns, damage, scrap, multiple units of measure, and approval rules also require company-specific validation. In summary, sample accounting is not just copying an item name. Use a separate SKU for quantity, use repack to transfer real cost, and use sales, delivery, invoicing, and payment to trace the outcome. Remember 3 checkpoints. 1.2 meters becomes 6 samples, 96 yuan remains conserved, and 2 paid samples generate 50 yuan of revenue with 32 yuan of cost. Before production rollout, freeze the coding rule, free sample policy, approvals, and accounting treatment with the finance team.